Hey, dividend investors, are you looking for a stock that has double-digit compound annual growth and a market-beating yield? Then you're going to want to stay tuned and watch this analysis of Lockheed Martin. Today, I'm excited to discuss this analysis of Lockheed Martin, ticker LMT. We're going to walk through the 8-step process that I use for due diligence on my stocks. At the end, I will share with you what actions I've taken or will take in my portfolio regarding this analysis. It helps me to learn more about the stocks in my portfolio by doing this, and by sharing this video, I want to give you the opportunity to walk through this process with me. Before we get into the content, I want to share something with you. One of the goals of this channel is that it inspires you as an investor to be all you can be as a dividend investor. So the question is, why is that? Why do we want to do that? Do we just want to be dividend investors so that we can be wealthy? And that, to me, that sounds pretty empty. Wealth is wealth, and you never really achieve it. You just always seek more wealth. So what is the purpose of the wealth? I believe the purpose of wealth is to help us achieve personal freedom. So as we achieve personal freedom, we can do what we want when we want. It doesn't mean we don't do anything. It means that we do what we want when we want. And having passive income helps us achieve personal freedom. And personal freedom helps us to leave a legacy for our children, for our families. And as we seek to achieve personal freedom, dividend investing, having passive streams of income are extremely important. So if this is what you're looking for, consider subscribing to the channel and ringing the bell, because then you'll be notified about future videos. Also, if you like the analysis of the Lockheed Martin, if you could give it a thumbs up, that would be awesome. It will help the channel and it would mean the world to me. So grab your favorite beverage and join me today as we seek to achieve personal freedom, one investment at a time. Lockheed Martin was founded in 1912 and is the world's largest defense contractor and supplier of fighter aircraft. Though best known for its F-35 Joint Strike Fighter, Lockheed's business spans various combat aircraft, missile defense systems, military helicopters, and satellite systems. In 2020, 74% of their net sales were from the U.S. government, while 25% were from international customers, which included foreign military sales contracted through the U.S. government, and 1% were from U.S. commercial and other customers. They are in the aerospace and defense industry. The defense industry contractors generate products with cutting-edge technology. This is not technology of connecting your phone to your car through AirPlay. This is some of the most technical technology in the world. They have strategic competitive advantages, such as product complexity that thwarts new entrants into the market. They have contract structures that reduce the risk for the contractor. They have decades-long product cycles, and they lack for alternative suppliers. Also, once a contract is issued, the switching costs are pretty high for a risk-averse customer. So there's a lot of competitive advantages in this industry. In terms of competition, the three main competitors from my perspective are Boeing, Northrop Grumman, and General Dynamics. Boeing, when I look at Morningstar, is trading at a discount to its fair value. However, there is a rating of high uncertainty with Boeing, and that's not something that I'm interested in at this point in my life. Northrop Grumman and General Dynamics are both trading above their fair value according to Morningstar. So I believe Lockheed Martin is the right investment in this industry to look at today. In terms of segments, they have 4 segments. The first is aeronautics. They are engaged in researching, designing, developing, et cetera, advanced military aircraft, including the combat and air mobility aircraft, unmanned air vehicles, and related technologies. This segment is 40% of their business. The second segment is missiles and fire control. They provide air and missile defense systems, tactical missiles, and air-to-ground precision strike weapon systems, logistics, fire control systems, and the list goes on and on. This segment is about 17% of their business for 2020. The third segment is rotary and mission systems. This is where they design, manufacture, service, and support helicopters, surface ships, sea and land-based missile defense systems, radar systems, sea and air-based mission and combat systems, etc. This segment was about 25% of their sales in 2020. And the last one is space. They're engaged in the research, design, development, engineering, and production of satellites, space transportation systems, and strategic advanced strike and defense systems. And that's 18% of their sales. What a cool place to work. Their competitive advantages are the complexity of defense technology. This is a complex industry. This is not Henry Ford putting a car together in the early 1900s. These are technically complex pieces of equipment. They have a long timetable for development. They have classified projects. So the information about these projects is not very well known. They have complex and costly vendor switching. So an example of that, evidently, from what I understand, the Sikorsky helicopter, which was acquired by Lockheed Martin in 2017, is a mainstay in the military arsenal. It would be difficult for them to switch from that helicopter. Long procurement cycles. For example, the F-35 procurement cycle lasts until at least 2070. So talk about a long procurement cycle. That's a long one. Risks. They have several risks. They have political risk. So as you can imagine, based on which administration is in the White House, there could be changing priorities every 4 years and difficulties with gridlock in Congress about spending. This could be a political risk for them. They also have the U.S. government as their main customer. And so you need to understand that risk related to Lockheed Martin. Contract execution. Many of their contracts are fixed price contracts. If they don't execute the contract well, they are at risk for making it right. And so that's a risk. In addition to that, some of the research I did pointed out that they have a new CEO about a year ago, and he came from American Tower, which is a fine company. The risk here is that he doesn't have significant experience in the defense industry. They also recently had their CFO resign for personal reasons. Currently, they have an interim CFO who's been there for a long time. He was the controller for the organization. So risks are they have a new senior leadership team. Let's look at capital allocation. Interesting that dividend growth over the last 5 years has been a whopping 10%. The latest growth, which was in September of 21, was a 7.7% increase. Over the last 20 years, they've grown their dividend by 17% per year. So if you're looking for a growth dividend stock, I think this fits the bill for that. Not only that, but check out the dividend yield. Dividend yield is 3.09%. Usually when I see high growth and higher dividend, it means that something's going on. And I think some of the risks that we talked about are essential to that. The growth that they're forecasting slowed because of spending changes in Congress and things like that. And it's caused the share price to be depressed. And I believe that this is a good time to get involved with Lockheed Martin. Capital allocation, shares outstanding. Look at this line. In about 10 years, they've dropped from 340 million shares down to about 280. That's about a 12% decrease in shares outstanding over the last 10 years. That's great to see. They also increased their share buyback program in the fourth quarter of 2021 by $1.3 billion, getting them to the $3 billion share buyback number. And check out these sales up and to the right. That's kind of what we're looking for. Since the year 2015, their sales have been on an upward trajectory. And remember, these procurement cycles are long, so they tend to be a bit sticky. Earnings payout ratio, the last 12 months is a 39%. The next 12 months is a 42% earnings payout ratio. This is very sustainable, very doable moving forward. Free cash flow payout ratio is at 56%. Again, very, very doable. Earnings per share continues to grow up and to the right. We like that. Free cash flow per share moves around a bit. You can see in the year 2018, I believe that's when the Sikorsky helicopter acquisition took place. Lockheed Martin's dividend safety is rated at an 84 by Simply Safe Dividends, and they have an A- credit rating. One other financial metric that's important with Lockheed Martin is their backlog. And when you look at their backlog in December of 2020, it was $147.1 billion versus $144 billion in the prior year. The backlog as of September 21st, which is the last information they've reported, is $134.8 billion. This backlog has drawn down a little bit. But if you look at it using the annual revenue of $66 billion, which was the latest, the backlog represents 2.2 years in 2019, 2.2 years in 2020, and 2.0 years as of September of 2021. So if everything shut off today, they would still have 2 years of revenue in their backlogs. Net debt to capital with that acquisition of Sikorsky in 2018, they took on a lot more debt. You can tell, though, they've made significant progress in paying this debt down. And their interest coverage ratio is 13.25 over the last 12 months. Fantastic interest coverage ratio. They have no issues paying their long-term debt. Let's look at valuation. Morningstar shows the fair value at $402 per share with an uncertainty of medium. And that's actually a decent uncertainty rating. And they went up significantly yesterday. I don't remember exactly how much, $6, $8 a share. The last close was $361.99. So let's call that $362. So $362 versus a fair value of $402 puts the discount around 10%. The average analyst price target and seeking alpha, you can see, is $388 per share in 1 year. So with a 10% dividend CAGR and a 3% yield, with the potential for price appreciation, I think this is a wonderful stock to add to my portfolio. And so let's talk about the summary here. They have challenging political and geopolitical environment. They're highly dependent on a single customer, which is the U.S. government. They have new senior leadership in their company. But let's look at the flip side. Each segment and the overall business has a wide moat. Solid balance sheet and credit rating. Their debt repayment has been phenomenal. They have a market-beating 3% yield and a 10% annual dividend growth over the last 5 years. They have increased their share buyback program to a whopping $3 billion, and they have a greater than 2-year revenue. I think you can tell already I'm very high on Lockheed Martin, and I plan to increase my position in them today or sometime this week by 20 shares. And you guys know the drill. I'm not an investment professional. You'll need to do your own due diligence regarding this. Every investor and every portfolio are different. So it's important for you to do your own due diligence here. As we go on this journey of personal freedom, I hope you'll join me in that by subscribing to this channel, and I'll leave you with this. On your journey of personal freedom, learn all that you can, invest consistently, and diligently manage your passive income portfolio. With that, I will see you on the next video.